Gold gained $19.50 last month and is still climbing. This is believed to be a reaction to Federal Reserve Chair Jerome Powell hinting that the central bank will slow the pace of its aggressive rate hike campaign that has weighed on the markets. Powell's comments bolstered growing optimism among some investors that the Fed will deliver a smaller 0.5 percentage point rate hike at its next meeting after 4 consecutive 0.75 percentage point increases to tame high inflation. Any signal of a pivot on future rate hikes would likely send markets higher. Bank of America also released a new forecast showing a solid path to $2,000 for gold by the end of the year. In a comprehensive 2023 commodity outlook note recently released, Bank of America says the price could exceed $2,000 an ounce next year. As of all the precious metals, gold has the most to gain on a Fed pivot. Bank of America said that with relatively limited commercial users, gold has always been driven by investor demand, and that demand in turn tends to be impacted by borrowing costs and the dollar which gold is denominated. Thus, a pivot away from the aggressive rate hikes through 2023 should bring new buyers back into the market, and some weighty buyers have been showing their hands. Central bank purchases have rebounded in 2022, with monetary authorities in Turkey, Egypt, Iraq, India, and Ireland all adding to their holdings. The latest survey by the World Gold Council suggests this trend is unlikely to change, with 25% of central banks expecting to increase their exposure to the precious metals further, compared with 21% last year. Now, if you want to buy some gold, here's some good news. In a webinar presentation Wednesday, Michael Widmer, commodity strategist for Bank of America, said that while he is bullish on gold next year, he is not expecting to see higher prices until at least the second quarter of the year. Widmer said, and I quote, "It's going to be a difficult environment for gold. In the near term, current headwinds are unlikely to abate until the Fed turns less hawkish. Notwithstanding, a pivot away from the aggressive rate hikes through 2023 should bring new buyers back into the market." Although the gold market continues to see healthy physical demand, Widmer noted that investment demand is the biggest factor impacting short-term price action. He added that the current macroeconomic environment is not incentivizing investors to hold the precious metal. However, Powell's announcement of a lower interest rate hike is already pushing the price of gold up. Bank of America expects a dramatic reversal of fortunes when the Federal Reserve stops raising interest rates altogether. The bank sees gold averaging $2,000 an ounce in the third and fourth quarters of next year. Looking to 2024, Bank of America sees gold prices remaining elevated with an average price of $2,086 an ounce. Widmer added that the underlying uncertainty that drove gold prices above $2,000 earlier this year remains firmly in place. Geopolitical tensions remain heightened, inflation remains a persistent economic threat, and an energy crisis threatens to push the global economy into a recession. If you want to avoid the rush and buy while it is still low, secure your gold now. Noble Gold Investments can help you. With Noble Gold Investments, you automatically get a dedicated account manager supported by an entire team, making sure your every need is attended. Call Noble Gold Investments at 877-646-5347. Don't worry, it's a no-pressure call if you aren't ready to invest. You can also start by downloading the Noble Gold Investments Gold Investment Guide. You can find the link in the description box or go to noblegoldinvestments.com. This has been Ivory Hecker for Noble Gold News.